flip-flopping of policies, and I think you'll be forgiven to think that we can expect a de-escalation in terms of the trade tensions. As we sit here today, 100 years on, or 100 days on, it feels like 100 years, are you more optimistic about the next 100 days versus what we've seen before?
Okay. So first of all, thank you very much for having me here as part of your launch event. I think it's so important for us to have more female voices, more voices in our community to also reflect the rich perspectives that we all bring, especially in this volatile, dynamic world that we're all operating in. So I represent wealth management, and the way I prefer to look at it is in wealth, we're also looking not just in the short term, but we prefer our clients to look at the medium to longer term. So it's not about the last 100 days or the next 100 days. What we're looking for is to guide our clients in terms of helping them to reach their financial investment goals over the longer run. So what our view is today is that we're looking at, nothing has changed. We still look at corporate earnings and the quality of the corporate earnings. So the advice that we've given our clients maybe like 30 days ago is not too different from the advice we're giving our clients today as well. Stay the course, stay invested for the medium to longer term, look for quality. And what does that mean? So the way we look at it is you should stay invested, but perhaps you can rebalance your portfolio. Money market funds, short to mid-term duration that will help to cushion your portfolio in this volatile environment. Look for high quality corporate earnings. So what we're seeing from the corporate front is that, well, the first quarter guidance from companies was all pretty good. I think, first of all, the trade flows held up because companies were doing more importing to cushion themselves for the upcoming tariffs. But we're also seeing the growth decelerate going forward. So we're seeing corporate earnings more downward revisions than upward improvements in earnings. So we do think that there will be some volatile dynamics going forward, but overall we still see positive growth. It's just that the growth is decelerating over the course of this year.
But in terms of your wealth clients, is there an appetite for risk? How are they looking to deploy their capital? Is there a pullback in certain areas, certain asset classes?
Okay. Our advice has been, and it was a bit uncomfortable for clients, like honestly, because we've been in a very long bull run cycle. Our advice to them was stay the course, don't buy into the dip. There's just too much news. You know, the news changes every day, right? You go to sleep hearing one thing, you wake up hearing a different thing, you don't know what to do. So again, our advice is stay the course, don't buy the dip, look for quality, and you should rebalance your portfolio. So I think in wealth, it's all about, the world's changing. So what you would do yesterday could be different from what you do tomorrow. But it's really important for clients to also know what they want to achieve in the longer term. And what the role that we play is to help our clients discover, like what, you know, have clarity, what do they want to do in the longer term.
But give us a sense of the kind of rotation.
Yes. So it's not the time to add risk. So if you think that like stocks have come down, it's the right time to go in, we're actually telling clients don't buy into the dip. You can rotate into money market funds. Look for bond funds with shorter duration assets. Look for companies with lower volatility in their earnings. I think this is the advice we're telling clients.
When we take a look at tariffs, some say that it will impact the way economies grow. In fact, there's already been projections where estimates are being cut pretty much across the board. How does that help or hinder wealth creation? How are we looking at growing the business, for instance?
Okay. So at Citi, the clients that we love are the ones who are change makers and who are creating wealth. And that hasn't changed. I think in the world that we live in, there's still a lot of innovation, a lot of creativity. So, and that's true for, you know, like corporate companies as well. So again, like look for where their innovation is happening. It still continues to happen in the world that we live in. In fact, in a disruptive world, there's probably even more opportunities for, you know, companies to differentiate themselves, for entrepreneurs to differentiate themselves, and to be disruptive as well, you know, to kind of play into the disruption and to leverage it, create wealth, create growth, create value.
We talk about the rotation. A lot of people talk about that rotation out of the US into this part of the world. What are you seeing in terms of the regions you cover? Southeast Asia, UAE, for instance, comes under you as well. Are you seeing that?
We are definitely seeing some rebalancing. The reality is the US is a very, very big market. So we wouldn't recommend clients to exit the US markets altogether. I think US markets, the capital markets, about like 70% of the global market. So not to have US exposure also means that you're not exposing yourself to where there's still a lot of like growth, especially in the technology space. However, we are seeing, like our clients, especially in this part of the world where the clients are very, very global, they're open to opportunities, whether it's like in Europe, in Asia, et cetera. So we do see some geographic rotation in terms of the portfolio. But it's not just about equities, it's also about fixed income as well. So again, I would say that there is some rotation, but overall, generally, our clients are thinking longer term, and so there's not like a seismic change in terms of the portfolios of our clients.
But it plays a bigger role in terms of diversification?
Yes, probably diversification, like more diversification. We're seeing probably a little bit pullback in equities and then more exposure into fixed income.
Well, let's talk about growing the wealth business. In Asia, for instance, we're looking at generational wealth transfer. We're talking a huge amount of money, trillions of dollars. In fact, I think to the tune of $6 trillion. How are you capitalizing on that?
So first of all, when it comes to intergenerational wealth transfer, it's not just about the flow of money, but it's also it's about values transfer as well. So how we're capitalizing it is that we're here to provide advice to clients in terms of legacy planning, portfolio planning, but we're also here to support clients in terms of helping their next generation navigate, build more confidence, build more competency. We encourage the older generation to bring in the younger generation into the portfolio discussions early. I think it's when I tell clients, I think it's for our clients who have been really savvy, who have been able to grow their portfolios over time, the best thing they can do is pass on the wisdom into the next generation. So it's about, like passing the wisdom, passing the values. I think that's really, really important. I'm a big believer in like values-based investing approach. And for many of our clients, they're incredibly successful, like entrepreneurs, business people, professionals. And so as part of that whole wealth transfer conversation, I think we encourage our clients to also weave in the values, how they think about like impact investing, investing with purpose, so that the next generation can then also carry on that investment journey.
What are the key themes that you're seeing? What are they interested in investing compared to the previous generation?
That's an excellent question. It's so interesting to see how the next generation is investing differently. I would say for the next generation, they're definitely a lot more purpose-driven. They tend to have a lot more curiosity, maybe because they've grown up more digitally, so they're savvier. They are prepared to venture beyond just the public markets, right? They have curiosity about what's happening in the private asset space. They also have curiosity about alternatives. They're prepared to take a little bit more risk to try. And I think that's great because they're younger. So they have enough time to make more mistakes and also learn from it, but also take a bit more risk, learn with it, and hopefully their portfolios will also reflect their risk appetite and grow accordingly as well.
We know that wealth is a very competitive space, and Jane Fraser has come out to say it is a key area for growth, key area to boost profitability. What is the strategy for Asia that's going to be different from the rest of the regions?
Well, first of all, what the data is telling us is that we're anticipating about 100 trillion in wealth creation over the next 10 years. And a lot of it is going to be driven by Asia. So our strategy for Citi Wealth is that we're going to double down in terms of our focus on Asia. I look after onshore and offshore wealth for Citi Wealth in Asia South, and that encompasses our wealth hubs in Singapore and the UAE. We believe that, so first of all, Citi is an incredibly global organization, but at the same time, we're also very, very local. So fun fact, Citi's been in Singapore since 1902. Incredible, right? So we we're not just a US bank with global DNA, we also really understand Singapore and we understand the region as well. So this is how we're going to capitalize. We've got great institutional insights. We understand the local context and environment. I think we're really, really well positioned to help advise our clients who are capturing the growth in assets in Asia and also help them navigate this complex world. We're able to bring Asian clients global connectivity. So for Asian professionals or entrepreneurs, business owners, if you're looking to grow your business outside of this part of the world, Citi has the right platform to serve your needs.
But how are you going to be different? We talk about the competition, the likes of DBS, for instance, which dominates the wealth space in Singapore, in Southeast Asia. You've had great experience in DBS because you spent a number of years there. Give us a sense of how...
What's different?
Yeah.
Well, Citi, going back to being global, Citi is in over 180 countries, right? And we have a physical presence in over 90 countries. That's difference in a big scale. So for instance, if you're an Indonesian client and you're looking to send your kids to school in the US or in the UK, you're looking for wealth management support there, we're able to support you. If you're also a business owner looking to grow your business in like South America, Citi is able to do that. So very, very few wealth management platforms have that global scale that Citi has. And so it's about bringing the best of our banking side together with our wealth management side, synergize it together, and that's the platform that we're able to give our clients. And that's how we differentiate ourselves versus some of the more local or regional competitors. The other thing is, I'm really, really proud of the Citi Cards business as well. So one of the differentiators that we have is for many of our clients, and hopefully for many of you here as well, you've got a Citi card in your wallet or in your bag. Citi is the leader in affluent cards in Singapore. And to me, if you look at some of the private banks who are just only focus on private banking, no retail connectivity. So that's also something that I'm leveraging as well, bringing together not just wealth management, but helping to basically delight our clients through our cards proposition. So a lot of the lifestyle, the things that you want, like fine dining, like travel experience, we're also able to cater through our cards proposition.
Talk to us about the headcount. We heard from Andy Sieg talking about how Citi plans to hire in Asia at a time when we're seeing a lot of firings within the bank as well. Rationalize that for us.
Okay. So first of all, I think Citi has definitely gone through transition and change and evolution, and I think that's what good companies do. You have to think about the long term and build towards sustainable growth. So what you've seen is just like how portfolios have evolved and you rebalance and change, what Citi is going through is we're rebalancing our headcount as well in alignment with our strategic priorities, which is very, very much anchored in wealth management. So we are still hiring, but at the same time, we're hiring where where the resources are in, for instance, helping our clients navigate the markets, having investment counselors, specialists to be able to help our clients make the investment decisions that they need.
So in terms of respective countries, where would you be hiring the most in Southeast Asia? Would it make sense to be looking at perhaps countries like Indonesia?
So for Citi, we're
a growing middle class.
Yeah, so for Citi, the great thing about the business that I operate is we operate both onshore and also offshore. So actually the advisors that we have, they're all based in Singapore. And the sweet spot that we play in is in the wealth management arena. Clients are looking to basically put their chips in different places. They don't want to put it all in one place. And so what is so attractive about where we operate in Singapore is we're a safe harbor, a safe haven for the international clientele where they want to put their money and make sure that it's safe for generations to come. And so we don't have to think about growing advisors outside of Singapore. And I think this is also good for Singapore as well. So what's good for Citi is also good for Singapore and vice versa.
So are you seeing an inflow, more inflows from China, for instance, since Singapore is seen as a safe harbor?
We're continuing to see inflows, not just from like one country, but broad-based. I think Citi has had an incredibly,
Citi has a sense of the inflows?
Yeah, we still see inflows from like North Asia. So, and part of it is because Citi has a very, very strong brand. It was in quite a number of markets across Asia. And so the brand still resonates with clients. And so we see North Asia. We also see Southeast Asia as well, like Philippines also continues to be quite strong. I also look after the UAE, and so we're also seeing in the UAE, there's also very, very strong growth in the region as well, and we give clients in the Middle East the ability to book both in the UAE and also in Singapore.
Of course, we can't talk about banking without talking about how AI is changing the landscape. How is Citi capitalizing on that?
Yeah, we have been rolling out, just like many other companies have, we've been rolling out AI tools to our staff to basically use. I would say, so for instance, you can use it to like compare documents, you can use it to provide you with insights. Currently, the tools that we've rolled out are very much for employee use. We haven't really rolled it out yet for customer facing. And again, we're trying to be a bit more conservative, right? So we learn through the employee experience first. So we make our employees the guinea pigs, right? In order so that at the right time, we can then roll out these intelligent insights to our clients. The other thing is, I think it's really important for our advisors to leverage AI. It's going to help them to understand their clients' behaviors and needs better. So we look at AI, especially on the advisory front, that we're able to provide human touch, but and also like advice that has been built up over like years of experience and wisdom. But it's also augmented by intelligent technology.
What's the biggest value AI will bring to Citi in 5 years from now?
To me, the question that I always ask is when we look at AI use cases, what is the impact it's going to have on the customer experience? Because for wealth, it's all about the customer. So anything that we do has to elevate the customer experience. And so to me, with customer needs, especially in the wealth, like the affluent space, there's only that much the advisor is able to digest, remember, retain, convert that knowledge into like highly bespoke, tailored advice. And so that's where AI comes in. And so the key thing here is it should ultimately elevate the customer experience. But we also know that customers don't want to just, talk to an avatar, like engage a bot, all these things. So a lot of it is bringing together the personal touch with augmented intelligence.
Before I let you go, just one final question. The biggest risk you see for your business in the next 12 months?
Oh, that's a good question. I would say, actually...
Is it Trump?
Yeah, I would say it's not true. The thing is, for Citi, we've been a very positive turnaround story. I think 2024 was a good year for Citi. The first quarter of 2025, it's been also a really good quarter. Citi Wealth grew about 24% in revenue. Investment assets also grew over 10%. So we've had a very strong first quarter, and the momentum is strong. And actually, whilst April was a little bit volatile and dicey. The first 2 weeks were volatile, but actually we saw things stabilize. And so with the tailwinds behind us, we actually still think that we're going to be powering forth. And I'm actually really positive and optimistic about the rest of 2025. Like I said, it's going to be dynamic, it's going to be volatile, but overall in wealth, the whole idea is you need a wealth advisor because you're also thinking mid to long term. And so actually I'm fairly positive about the rest of this year.